Hey, it's Tom here and welcome back to the channel. Now, in this video, I want to cover a recent earnings update out of a company called Thor Industries. Thor is a company that I've been invested in for a few years at this point. I haven't added to it for quite some time, but it remains, I think, the second largest position in my portfolio behind Heritage Growth Properties. So it's one I continue to keep an eye on, and kind of counterintuitively, I'm actually quite pleased at the poor stock price performance recently, because as we'll get into in this video, they're starting to kind of buy back some shares for the first time, at least material amounts of shares for the first time. So I'm going to dive into basically the business update and how the core Thor Industries business is performing, and then also talk through the news around buybacks and also some insider purchasing from earlier this year or late last year as well. We'll get into some details on that. So that is a topic for today's video, but before we get into that, we do have a sponsor for this one, and this video is sponsored by Hatch. Hatch is the platform that I personally use for all of my US investing, for me as a Kiwi based here in New Zealand. And in 2022, Hatch is asking you to think about what your big and small tomorrow goals look like. For me, the goal has always been financial freedom, putting a little bit away today with the aim that I can do the things that I want to do tomorrow. Everyone's tomorrow looks different, whether you want to buy your first home, travel the world, or become financially independent. Reaching your goals starts by taking the first step. That's why I invest with Hatch, to help me make my plans a reality. If you want to get started investing with Hatch, check out the first link in the description, where you can get a free 20 New Zealand dollar top up when you make your first deposit of 100 New Zealand dollars or more before the 30th of June 2022. And a quick second shout out to Hatch actually before we get into this video, because they have been a bit of a lifesaver recently, and that is because I am planning on going to the Berkshire Hathaway annual meeting over in Omaha this year, and I'm planning to travel and go on that trip with Brandon from the New Money YouTube channel, and also Hamish Hodder from the Hamish Hodder YouTube channel. And some of those guys have struggled a little bit to actually get tickets to the annual meeting, because they don't have kind of direct ownership of their one Berkshire B share that we all kind of purchased for the purpose of going to the meeting. So their shares are kind of held in street name, I think the technical term is, whereas with Hatch you have direct ownership of your shares. Your name will be on the shareholder registry. You get sent all the proxy documents and can vote your shares, and can fill out the bit of paper to get a pass for the annual meeting. So shout out to Hatch for helping me out with that one as well. Okay, so let's get into this update from Thor. If you're not familiar with the business already, a very quick overview is that Thor are basically the biggest business in the world when it comes to motorized RVs and also towables, or motorhomes and caravans, depending on what part of the world you live in. You may call them different things. Over time, they have acquired a large number of brands. They have a kind of Berkshire Hathaway-esque decentralized kind of management structure, where the headquarters and management team are really very small, but they have acquired these other businesses which each have their own managers and kind of lead their own lives. So that's a very quick update on Thor. It has had a pretty good track record over a long period of time, although it is most certainly a cyclical business. So it does go through highs and lows, and right now we're in the middle of a reasonably sustained high and a kind of big boom that Thor has been going through recently. So if you do ever do valuations on Thor or dig into the company, just be careful to make sure that you kind of normalize some of the numbers that are coming out. They're going through some great times right now, but I'm sure, with any cyclical business, and Thor is no exception, those big booms and really strong earnings and sales years, they won't last forever, although I am definitely a fan of what Thor are doing, and they've got a great track record of long-term growth, assuming that you kind of even out all the bumps in the road along the way. Okay, so here's the update for the second quarter of the fiscal year 2022. Net sales of 3.88 billion, up 42%, kind of crazy. Thor has over the long term grown maybe kind of low teens compounded percentages. I'll put the exact numbers up on the screen here. But to be up 42% in net sales is kind of crazy. Gross margin up 220 basis points, and diluted earnings per share up 101% for the quarter. Now, I put a tweet up the other day basically saying that when I first bought into Thor, the annual earnings for the full year, and I think that was 2018, was a little north of $8 per share. So to see them now doing about $4.80 per share in a single quarter is kind of crazy to see that growth. So they're definitely having some massive sales at the moment, and they've kind of had that for a period of time now. So as it stands right now, Thor have this massive order backlog. So the backlog for comparable quarters over the past few years looks like it's ranged anywhere from, at the very, very low end, about maybe $1.5 billion, up to about maybe $3 to $4 billion on kind of the higher end. But over the last couple of years, that backlog has just exploded upwards, and as of this recent quarter, the backlog was sitting at $17.73 billion. Now, if you just take kind of a few seconds to comprehend that number, Thor just did net sales in a quarter of a little under $4 billion. So, you can do the maths on how many quarters it's going to take them to work through that order backlog. Thor is a wholesaler, so they don't own RV dealerships or anything like that. They sell to the dealers, who then go on and make a margin on selling the vehicles themselves. So this is a backlog of orders coming from RV dealerships, and that number is just through the absolute roof at the moment. Now, something else I like to keep an eye on this particular slide is the dealer inventory. So like I just said, Thor wholesales these RVs to dealers. So it's important to kind of keep an eye on the health of the business on the dealer side. Now, if you look at the stock chart actually for Thor, I don't typically like to use stock charts to explain business performance, but with these cyclical businesses, sometimes the highs and lows of the business are quite closely linked to the stock price. So in 2018, you'll see that they had a massive crash down, and that's where I kind of got the opportunity to buy my shares, is after a big kind of crash out from, I think, as high as like $150 a share in 2018. Now, what happened in that situation is basically Thor again was going through a great kind of year in 2017 and 2018, and what they ended up doing is basically overproducing, and we ended up with dealers having massive inventories. So they had a huge amount of RVs and so on kind of sitting on the lot unsold, and they had to obviously sell those vehicles before they went and put in more new orders with Thor. So Thor was going great. They thought, look at all this growth, that's fantastic. But it turned out a lot of that growth was going towards just filling up the inventory at the dealers. So it's an important one to keep an eye on, and in the most recent quarterly update, that inventory did grow, but it's getting back to now, I would say, more normal levels. It's coming off a very low base where dealers basically had very little inventory. They only had about 78,000 kind of units of Thor products. That's now back up to about 112,000, and I'd say that's maybe a little on the light side, but getting back to kind of a more normal range now. And it was very nice actually to see in the management commentary from Thor this quarter. I'll try and put a screenshot up of it here. They've basically said that they recognize that was a mistake that they made a few years ago, was just overshooting production. And they said that they're going to monitor that dealer inventory very closely, and if they have to, they will scale back production in order to not have another kind of blowout in a dealer inventory. Now, although that backlog is up huge year over year, up to $17.73 billion, a massive jump from the same quarter last year, it is actually down slightly quarter over quarter, so they're finally starting to have that backlog go the other direction and be able to work through and produce these orders faster than the orders are coming in, which they haven't done for a little while. So the record backlog from last quarter was $18.07 billion. That's now down to $17.73 billion. So it's still huge, but they're starting to work off some of that excess. Now, one of the questions that I see a lot of people asking about Thor, particularly in recent quarters, is really to do with, supply chains and sourcing raw materials and, shipping costs and so on, and trying to understand whether that has any significant impact on Thor's business. And it's been really interesting. I honestly would have thought that it would have a greater impact on Thor than it has turned out to have had. So they split the business into a few different segments here. So if we look at the North American towable segment first, the bit that I really want to pay attention to here is the gross profit margin. So the gross profit margin is actually up quite significantly. Year over year, we're up from 16.6% to about 19%, which I believe is very close to a record, if not an absolute record, gross profit margin. And the bit of commentary that they give on that is, gross profit margin increased 240 basis points, driven by improved labour, overhead and freight costs as a percentage of net sales, partially offset by an increase in the material cost percentage. So we are seeing some cost increases from materials. We've seen, a bit of a pullback actually in labour costs and freight costs, at least as of this quarter. But they are having absolutely no trouble passing these increased costs onto customers. They're earning the highest margins that they ever have, and from a shareholding perspective, that is fantastic to see, and it really does not seem to be slowing down the orders that are kind of coming in the door for Thor as well. And the trend was pretty similar across a lot of the other business segments. So North American motorized, again, gross margin was up, slightly smaller numbers here, but we're going from 13% to 16%, which is a huge kind of delta between those two. And things were a little more lackluster in the European segment, which is a newer business component for Thor that they acquired 1 or 2 years ago now. Gross margin down from 12.9% to 12.5%. So from what I can gather, the European segment does seem less profitable by a bit of a margin than the North American segment. But from the order backlog perspective, it is quite interesting to see that a lot of the decrease in backlog actually came from the European business, and they still have a big kind of order backlog, largely North American focused, and North American is kind of the most profitable aspect of the business. So that backlog for Europe has still grown year over year. So if we compare to the second quarter of 2021 to the second quarter of 2022, it has grown. But if we look at their previous update and compare some quarter over quarter numbers, that tells quite an interesting story. So the European backlog last quarter was 3.35 billion, and that is down to 3.05 billion this quarter. So that explains almost all of the drop in backlog. Looks like it's almost purely out of the European business. If we look at the North American segments last quarter, the towables were at 10.44 billion, and this quarter we are at still 10.44 billion. So no change in backlog in North American towables. We also have a North American motorized backlog of 4.28 billion, and that has dropped only very slightly to 4.23 billion this quarter. So the North American business is still getting a lot of orders, even though they're producing at record margins and record rates of production. They're still kind of working really hard and largely sort of standing still in terms of actually processing all the orders that are coming in. Now, I won't have time to go through everything in this quarterly presentation from Thor, so if you want to check out the full slide deck, that will be linked down in the description below. But one last bit that did kind of jump out to me a little bit with this quarterly update is Thor do always share their kind of overall industry, or some market data on the overall industry. So if I go back to last quarter's document, for example, I'll put up a screenshot here where you will see basically the growth in RVs over time, whether that is towable or motorized, and you'll see some reasonably kind of low-ish compound annual growth rates. So largely the number of RVs sold across America essentially grows at about inflation. And if we jump over to the most recent update, we've seen some of those compounded annual growth rates for the past 5 years really leap up. So this really strong past couple of years has lifted that 5-year kind of compound annual growth rate up quite high. And the 5-year TIKR is now sitting at sort of 6 or 7%, kind of depending on which segment you're looking at. So Thor typically gets, a little bit of kind of baseline growth out of just general growth in RV demand, but typically their real big growth engine has been through acquisition. So it has been interesting to see this organic growth kind of picking up quite a bit in more recent years as well. They're getting to a scale now where big acquisitions that will significantly move the needle are going to be challenging to do, and they're looking at other alternatives for using capital, such as share buybacks, which we will talk about in a sec. But to see some kind of extra organic growth coming through the industry is definitely positive from my perspective. Okay, so for the final part of this video, let's talk a little bit about capital allocation. Like I said, Thor is getting to a point now where doing big acquisitions is going to be more challenging. They've started to buy some parts businesses and things rather than just buying RV brands, which they've done for a long time. They've got a huge market share, so that's kind of something they clearly find interesting. But something they're also starting to find interesting is buying back their own stock as a kind of means of allocating capital. And if you look at the stock today, it currently trades at about 5 times earnings. So again, they're going through a big boom at the moment. So potentially those earnings are higher than what you might expect kind of moving forward. But nonetheless, at least on that metric, it looks interesting. And Thor clearly kind of think it's undervalued as well. So they have been very good allocators of capital over time in terms of paying intelligent prices for businesses, and it looks like they're taking a similar sort of approach with buying the stock. We know that buying, doing share buybacks below intrinsic value can be incredibly beneficial for shareholders. Doing them above intrinsic value can be value destructive. So fairly recently, Thor have authorized share buybacks up to $250 million. In the last quarter, they did about $58.3 million of share buybacks. So they're starting to use up some of that $250 million that's authorized. If they can theoretically get through that full $250 million at current market prices, by my maths, that would allow them to buy back a little over 5% of the shares outstanding, which is not insignificant at all. And one of the things that I thought I would also just share very quickly is there has also recently been a little bit of insider buying as well. And the one that kind of jumps out at me the most is from Peter Orthwein, and I hope I'm pronouncing that name correctly, but Peter Orthwein is basically the founder of Thor. He is no longer involved really in the day-to-day operation, but he still sits on the board and has a huge shareholding. Last time I looked at that, it's roughly valued a little under $200 million, so a very significant amount of money for him. And it looks like in late January he actually purchased some stock. So these look like large numbers. He bought a little under $1 million of stock, but relative to his $150-200 million shareholding, it's not that significant. But in my view, anytime someone's putting $1 million to work, they're probably taking it reasonably seriously. So it was interesting to see that. And you definitely don't always get this with insider buying, but following that purchase, he actually spoke to Barron's about it and kind of explained his logic in terms of why he was purchasing that stock. So he said, I paid under 5 times earnings before interest, taxes, depreciation, and amortization. I've been in the business since 1977, and we've acquired companies at 6 to 7 times EBITDA, sometimes even 9 to 10 times, he added. The future looks very bright. Our backlogs are huge and dealer inventories are low. COVID introduced a lot of people to the RV lifestyle. So that is my update on Thor. The business definitely continues to fire on all cylinders. And, I would frankly love to put some more money to work in Thor if I got the chance. It's a business that I feel as though I understand really, really well at this point. It's definitely not one of these high-tech, huge margin, grow consistently at 20% a year type businesses. But I think if you can get in there at an attractive price, and not financial advice whatsoever, but I think if you can get in there at an attractive price, it can earn, good returns moving forward and provides a margin of safety, which I'm always looking for as well. So I would love to be able to get a chance to buy a little more if the price comes down. That obviously will be beneficial for ongoing shareholders with the buybacks they're doing as well. But it'll be really interesting to kind of see how they get through this order backlog kind of moving forward. I think it's going to take quite some time really for them to work through it all. I don't think they've ever seen a backlog anywhere near this large, and I'm quite fascinated to kind of see what Thor looks like once they eventually do get out the other side of that, even if that's 1, maybe 2 years from now. I mean, they've got probably a year and a half's revenue sitting there in order backlog already. So even if no dealer puts in a single order with Thor over the next year or two, they're probably still going to have some pretty strong sales. So this will definitely be an interesting one to continue to follow. I really like what they're up to over there, and I hope you liked this video. So that's it for me for this one, and I'll see you in the next one. Cheers.